So the last asset we are going to be looking at today is my favorite, and that is the XAUUSD. And the way things are going right now, it really shows that the market participants are still uncertain of where price is likely going to be going. And after being pulled out of our sell position from yesterday, remember we did capitalize on, we talked about selling the breakdown of the 2027 dollar area right here yesterday, and in fact we saw how price moved approximately 102 pips in our favor before the bullish momentum started coming in. And I do hope you moved your stop losses like we usually do in this community when price moves significantly well in our favor. And if you done that, if you did that, you must have been taken out with a reasonable amount of profit, let's say 50 pips or 40 pips, depending on where you moved your stop losses, or at a worst case scenario break even if you had moved your stop loss to the entry point. And gold has witnessed a resurgence in buy pressure, reclaiming positive territories, especially during the Asian session, as we saw how price remained around the 2035 area with a lot of buying pressure to emphasize some interest in buying of this particular asset. Now, as it is, the US dollar is maintaining its pullback, driven by an improved market sentiment and a modest uptick in the US Treasury bond yield. And of course, we do know how correlated the US Treasury bond yield is with the US dollar. If the US Treasury bond rises, definitely the US dollar is going to rise. And if it drops, the US dollar too will drop as well. And in fact, in recent time, we saw a little bit of uptick in the US Treasury bond. And I think this is what is affecting or limiting the upside of the XAU of the gold asset. Now, we had recent the dip in U.S. consumer inflation expectations, heightened expectations that the Federal Reserve might initiate interest rate cuts as early as March, acting as a supportive tailwind for safe haven assets such as gold. Now, currently, I'm of the opinion that market participants may appear to be cautious, as you will see in the last, let me say, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and 11 hours. You will see the nature here. It shows that there is a level of uncertainty going on around this area. And I'm of the opinion that participants are cautious and may opt to await the latest US consumer inflation figures, which is coming up, I think tomorrow, I guess. Yes, on Thursday, sorry, consumer price index coming on Thursday. So they might be waiting for these figures for insight into potential future of the Fed policy moves before determining the near-term trajectory on this asset. So this cautious stance for me is warranted, of course, particularly as we position for a potential recovery from Monday's near 3-week low at the 2017 area. Now, to navigate this landscape, the levels identified on this chart is going to be playing a major role in guiding our decision, and the most important one right now is the 2035 level, which happens to be our key level for the week. Now, for those of you who are not part of our live session, let me quickly run live session yesterday. Let me quickly run through the higher time frame so we can see what is really going on from an holistic perspective. So we started our analysis at the beginning of this week, right on the daily time frame. And on the daily time frame, what we did here on Monday was to take into consideration the nature of price action since the month of September of last year. And what we were able to see here was the fact that price has been on a bullish momentum, and in fact it went ahead to transition into what is looking like an ascending channel. When we connected the series of higher lows, we have the support line of the ascending channel, and when we connected the series of higher highs, we have the resistant line of that ascending channel. And whenever price remains within the ascending channel, we obviously want to look out for patterns and structures that supports the idea of buying. Now, to make things easier for us to position ourselves for the next move, we marked out our key level at a $2,035 area, a level, or let me say a zone, which has played a major role in determining the direction of price action since the month of April of last year. And in fact, this area has been characterized with a lot of selling pressure. Look at what happened here, selling pressure. In the month of November, though price did break out of that structure, remember we had an astronomical high around here, but price did drop back down. We saw price break out of the structure again during the later part of December last month, and then we saw at the beginning of the year selling pressure again brought price back into that 2035 area. So you would agree with me that we are at a very crucial juncture in this market. And look at, let me zoom in so you can see things clearly. Look at how the 2035 area also shares a confluence with a support line of that ascending channel. And with a trend line like this, I would like to see price break down the trend line for me to start considering selling this particular asset. A breakdown of the trend line, price will also have dropped below the key level to incite a sell-off here. But if we continue to see buy pressure around this area or above the key level, and price continues to find buy pressure here, it could incite another wave of bullish momentum. Now, to guide our decisions for this week, we had a beautiful setup on the 4 hours time frame, which if you look at this closely, you will see that beautiful ascending trend line right here, which was tested last week Friday, a little bit broken this week, and in the last 12 hours price has been trading around that trend line. Though we saw the breakdown of the trend line here yesterday, remember, we saw the breakdown, which we of course took advantage of. But if you look at the nature of the candle after the breakdown of that trend line, you will see that we have what looks like a hammer candle, which technically tells us that buyers are still very present in this market. And following that, we saw our price climbed up back into the key level and the ascending trend line, and price has been oscillating just right around that area, emphasizing the level of indecision going on here. So you can see why I said it is very, very important for us to exercise patience, as depending on what happens around that key level at the $2,035 area will decide what we are going to be doing today. If selling pressure persists below, we could look out for selling opportunities, and if price climbs above, we look out for buying opportunities. Now, to see things more clearly, we scale down into the 1 hour time frame so we can see what has been going on here. Personally, I already have a buy position triggered after price action moved above the 2035 area, and in fact I have a wide stop loss here around the 2028 2027.50, which dovetails to about 60 to 70 pips stop loss, or 80 pips stop loss, depending on where your entry point is, so that I can give enough breathing space for price action to move around. So I still maintain a bullish bias here. And if you look at the structure closely, you will see that since last week Friday, we had an impulsive left into the structure. And you will see that as soon as price tested the 2017 level yesterday, buy pressure resumed. Here price appeared to have transitioned into a reversal pattern, where coincidentally the key level we identified at the 2035 area will also be serving as the neckline of that reversal pattern. Isn't that interesting? And what a beautiful confluence that is. And to add spice into this, you will see that we have an ascending trend line, which we did identify on the 4 hours time frame, remember, also sharing a beautiful confluence with that particular neckline and key level. Now, if price remains above the structure, we feel very confident in buying the XAUUSD, and of course looking out for more opportunities to maximize the move had the breakout of both the $2,046.50 level and of course the $2,050 area. So I still maintain a bullish bias on this particular asset. However, in as much as we are seeing a reversal setup here and seeing things that looks like a build up for buying opportunities, we cannot ignore the potentials of sellers. Now, for me to sell, I would actually need price to take out the lowest point it has been for this week at the $2017 area for me to confidently join a bearish move. However, if you look at the distance between where price action is right now and the breakdown of that structure, we have a whopping 170 pips distance. So are we going to wait all the 170 pips to happen before joining any bearish momentum? Well, I know, but I would like to see significant signals that sellers are building up momentum, like series of lower lows and lower highs on our lower time frame for me to feel comfortable selling and then had more position at the breakdown of the 2017, hereby maximizing the potential of that bullish move. And while I was thinking of this, I saw a trend line, which I will call a temporary one right now, as you will see right here. So I will call it a temporary one. Let's see if price can break down and retest that structure, and we start seeing signs that buyers are finding it difficult to climb back above and continue selling pressure below the structure, will definitely incite some sell-off in this market. So I want us to take this into consideration while we monitor price action. So at this point, I told you I already bought this asset at the breakout of the 2035 area. So I have a very wide stop loss on this one. But if selling pressure persists below and I begin to see that this ascending trend line could not be climbed back up, then I would manually take out my buy position and then find a way to join a sell move to the downside and then have a sell stop order below the 2017 and the 2020 for $7 area to maximize that bearish move. So our center of focus for today is around the key level, and depending on how a participant in the market react to this key level will give us an insight into what we are doing next. So it's on this note I would like to call it a day, but before I do, let's see if there are any questions. If you need some clarifications or you need to ask any questions as regards to what we have talked about today, feel free to let me know in the comment section.